In the beginning of the show, I talked about the Bitcoin move as Bitcoin simply evaporated. Well, it gave up $2,400 while they were sleeping, and that was about 11% drop that happened very quickly as it got up to kind of double top area for Bitcoin. I'm not a fan of Bitcoin, as I've made pretty clear, but my analysis is always agnostic. We're going to show you a little different thing today because the focus is on 1 to 3 months in the MarketWeek show now, but I'm going to show you 2-hour charts today just so you can get an idea of some of our proprietary indicators and how short-term traders can use some of this. So we're going to take a peek here as now we look at the Bitcoin market. So this is Bitcoin on a weekly cycle chart. You want to learn about cycles and this type of analysis? We'll go to askSlim.com and click on the Cycle Analysis Workshop, and there's a free video on there for you to see and all kinds of things. We have a cycle workshop that is 20 video modules that I created over 2 years' work. I've studied this now for 45 years, and there are a few experts in the world like I am and like Arvi is in doing this type of analysis. So you want to learn from us, it's great. This is the Bitcoin chart looking at the weekly analysis. You'll notice yellow ovals in there. So what the yellow ovals are showing you are periods where what we call the dominant cycle, that's this cycle right over here, that's when it comes down and you get some of the biggest breaks that you can see in there. Sometimes you only get a modest little break, and that shows you how bullish things are, and it explodes back to the upside. Did something similar right over here where it had a modest decline also. What's interesting in here is that this has a lot of times the cycle patterns you see are lined up perfectly. You'll notice these are out of phase. That's what we call them. And you can look at the principle of summation to understand that in our workshop. So what we have here, as you can see, this blue minor cycle, and those are showed you how the ideal forms on the bottom and how the actual forms on the price chart. And what happens is that when the minor cycle is pushing down but the bigger cycle is pushing up, you get this action where essentially you have two forces that are going on, and those two forces send the market into a pattern where the corrective forces are pushing down, as you can see right over here, this bigger dominant force pushing up, as you can see right in here, and that creates a triangle, just like it did right in here also. And then after that's over with, the forces move to the upside, and you see this is our momentum indicator, and that was moving up very, very sharply. All of that perfect. It gets up here back close to that 2000 area and then gives you this dark cloud cover. What that is a warning in the candlesticks that that peak is in. Now you see the minor cycle coming down right over here, and we have that projected down to it getting somewhat under about 16,000. That takes you out into around mid-December. Then another rally. And then we get into that yellow zone over here where the price could fall again. So we think that now we're establishing a range. This is about 19.6. This over here is about just under 15,000, 14,750 on that support zone. And that's the range that we think we're going to see Bitcoin move in. The real risk comes out, and where we think there's the potential for the crypto crash is out in spring right over here, where these cycles all turn to the downside again. So we think we're going to see a big range in here of about $5,000 over the next 3 or 4 months, and then it turned down again. This whole thing about 21 million, the fact that it's a limited number and 21 million Bitcoin can only be created, and most of that is already done. In the next 100 years, we'll create the rest of them. And so it's very difficult for miners right now. But don't worry, there's plenty of cryptocurrencies. There's over 5,000 of them right now, and and they're growing. And it's an unlimited supply. Facebook is going to come out with theirs just pretty soon. And so no shortage of cryptocurrencies out there for sure. And this whole fantasy of 50,000 or 100,000 is nothing but pie in the sky. And in the meantime, I will be 100% agnostic. When it's bullish, I'll tell you that, just as we did right over here. You see in October, we upgraded it, and it was a perfect timing on that upgrade as it exploded to the upside. Now we're looking for a range, $5,000 range, and then out into the spring, some big downside risk. This is not going to be popular amongst the Bitcoin lovers because they see those real high numbers. I think it's purely fantasy. And no matter what happens with the Fed, well, I mean, if we do get printing it's possible that they do, well, that'll be part of what holds this up for a while. Of course, that would help gold also, but the true forces out there are really deflationary. And I know people will say, how is that possible? I'm going to talk more about that going forward in coming weeks, as I read a fantastic book, which is called The Price of Tomorrow. I'll talk more about that, written by Jeff Booth, The Price of Tomorrow. Fantastic book that tells you why deflation is a force that just can't be stopped. So there's Bitcoin and a lot of things out there that are going up in the crypto world that is not likely to be able to continue as we move into next year, where I think there's going to be a lot of risk. I'll do some bigger picture analysis on that as we move forward. Right now, looking for, over these next several months, about a $5,000 range. And right now, we're dead center in the middle of that range. And you can see this choppy condition that really is setting up right in here as these cycles fight each other. And I think we're going to see a lot of that movement back and forth. That is a look at Bitcoin.